Welcome everybody. Today, as promised, I have come with the third edition of our video presentation, that is retail banking to corporate. As previously, I have promised to all of you that today we will, on the third video, we will discuss regarding the interview questions. So I have come with a set of questions, very basic one, which are being asked in the preliminary or the initial round of interview. uh, those questions I have taken today. So I am here today to give you a bit understanding of what they actually intend to ask and what answer they want to know from my past experience, from the feedback which I've get from my friends who have attended these interviews. So I have get a collection of that, and today I'm showing it to you all. Prior to that, actually I want you all to see and read also my previous couple of videos which I've given, that is basic of AML KYC and international banking, which is already available on the channel. To if you liked it and if you see whether the content is good or bad, kindly comment on it. And if you like the content of the videos, kindly share it also. And comment in the comment section, add your feedbacks, that how did you like the video, what are the scope of improvement on it, and if you have any additional question onto that, kindly post it in the comment line. So let's go ahead with this video and see what is the content of today's video. So the first question which any of your AML interviews you will be giving in any of the corporate, this question which is shown on the video is one of the basic questions which is asked by HR or tech lead, that what do you understand by KYC and how it is different from AML. This question seems to be very simple, since all you are from banking, you know what is AML and what is KYC, but we need to answer it in a very careful manner since we are answering it in a corporate. So let's divide this question into two parts and go ahead with it. So the first part, if we are coming on a very basic note of AML and KYC. So if we are coming on the AML part, normally if you think about this word AML, the definition comes in your mouth. That is anti-money laundering. And since you're working with domestic banking, let me show you additional things like this. So whenever anti-money laundering comes in your mind, you know the word black money to white money comes in your mouth. Demonetization comes, that all the money which are in physical came into accounting, came into bank. Whenever we do a withdrawal or deposit of 49,000 threshold in domestic banking, we need to give a KYC or a specific reason why we are doing it. After GST has come into place, all the businesses, even though it is a small one or big one, it is being accounted. They are being accounted for the money they are generating, money they are spending. Digital currency has come into play. Everything is being done by QR code, by phone pay, Google Pay. Even crypto has come into place. So your understanding regarding this AML whole thing is okay. And we got to know that, yeah, you know AML. But if we are answering this question in corporate, we need to be a bit more specific. We need to have a clear understanding of it. Okay, we need to have it a bit insight, a bit more informative definition, so the technical or HR guy who's listening to you will get to know that you will have a better understanding of AML on the international part, not on a domestic part, because we are trying to get into the corporate. So let's go ahead and see what could be a better definition of this AML thing. Prior to that, we need to know why AML is important, and why we are why AML is important in this world. World is running even though without AML, right? It is not a petrol or it is not a food grain. Even though AML is important and international banks are following it like anything. So the primary reason of following it are the fines and penalties which are faced by them. So let's see and go ahead. From the Google, I have retrieved few of data for the year 2021, that what are the penalties which are paid by international organization. These are the very few of the data which I found in Google. So let's coming on that. AM Bank, which is a Malaysia-based bank, was fined of 700 million in total, which counts to be 552 crores. Similarly, ABN AMRO, which is Dutch bank, which has been fined 453 crores. Capital One is an American bank, has been fined 307 crores. And Yush Bank, this is a common name in India. You have seen the office of it some in Bangalore and Mumbai. They have offices. It has been fined 102 crore. So whenever the fines come into place for the international banking, the fines are really huge. So because of this fear of the fines, and having their reputation being damned, because they are being fined by the regulators, They are following AML guidelines like anything, because of which we have AML jobs in India, because we are having a cheaper labor. On the other hand, in India, like recently, SBI has been fined, 50 lakhs, and Bank of Baroda has been fined 1 crore. So the regulation, we are following the regulation, but it is not that much stringent on our part actually. So that's the main reason, kind of, the number of AML jobs which our according in our domestic banking we have, and the number of job in international banking we have a huge difference up to that. So since you got understanding that why AML is required on a practical note, let comes to the definition of it. So let me read it out to you. AML, anti-money laundering, is a umbrella term for the range of measures and control and processes that firms must put in place in order to achieve regulatory compliance. Let me explain this first line to you. Umbrella terms means it is a big thing. It's a kind of a multiverse. AML is a kind of big multiverse which contain lot of things, which ranges from measures, control, and processes that firms could be anything. It could be a financial institution, it could be an NBFC, in order to achieve the regulatory compliance. Now, this definition which I have given you is a kind of a regulation neutral. Like this definition applicable for even India. If this definition is applicable even in US, because every regulatory agency has their own guidelines, right? So every institution or every regulatory agency frame their own guidelines, their own protocol, and every financial institution that resides in the country, that operates in the country, has to follow it. Now, coming on the second point, any money laundering regulation are in place to mitigate the risks of money laundering and terror financing. Now, coming on the third point, financial institutions are required to monitor their client to prevent money laundering and report any financial crime they detect to the relevant regulators. As I told you, AML is a neutral term. It applicable for every country, and every country has their own regulation. So financial institutions which are under AML ambit need to monitor their clients to prevent money laundering. You cannot stop money laundering. Okay, we have certain set of regulations to avoid it. So here prevent term is used, and if we detect any money laundering, so we need to report it to financial institution. Now coming on this financial crime part, financial crime is a very big term. I will explain it to you in my next videos. So collectively saying, all the money laundering activities are being collected inside financial crime. Financial crime also include terror financing. Now coming on the fourth point, where a business is functioning determines the local and international regulation they need to comply with in order to continue operating. As I told you earlier, that every country has its own regulators, they have their own rules and regulations as well as protocol for their financial institution and NBFCs. Similarly, if a company or an institution or individual is having business with multiple countries, for their country they need to comply with the regulations of that country in which their business is operating, or the business or they are working. So suppose if a person is working in both US and India, he is generating income from both the country, he need to comply with the regulatory guidelines of both US as well as India. He cannot deny saying that since I am a resident of US, I will not obey Indian financial rules. So if we are answering this AML question in our interview, we need to include all the 4 points. AML is not a single thing, it is a big thing. So whenever we are answering this question, we need to include these terms: firms, regulatory compliance, terror financing, relevant regulators, financial crime, international regulation. Only when we include all this in terminology, the interviewer or the tech lead who is listening to us will get to know that yes, we have actually worked in international compliance. We have to forget our understanding of domestic compliance at that time when we are answering this question. We need to stick with the terminology. That is the trick to crack an interview. Now, coming on the second part of the question, which I initially raised, that that regulators. So, as I am giving you example, for UK the regulator is Bank of England. For USA it is Federal Reserve, and for Dubai it is Central Bank of UAE. So every country, every regulator is having their own regulations. So this is a regulatory neutral definition. I know it won't be easy for you to remember the whole thing, but since I am trying to give you understanding of it, try to understand it, remember the terminology, only then you will be able to answer this in a complete manner. Now coming on the second part of the question, that what is KYC? Okay, so KYC, as I told you regarding AML, the basic thing, I am repeating the same thing for KYC. KYC is know your customer. This is the basic definition which everybody is knows. So if we are coming to a domestic banking, when we go for the KYC, so we have this very this common document which we collect irrespective of whether it is a NBFC or bank, that PAN, Aadhaar, driving license, utility bill, your latest PIC is required, even though when we are opening an account or we are doing the KYC of it. If we are opening the account and doing the KYC, after that we initially, not initially, but as the account get opened, depending upon the profile, depending upon the type of salary or the business or income source the person gets, we categorize it to our different parameters like low, high and medium. As per that we categorize it and we maintain the risk score. So coming to the corporate part, again I am repeating the same thing. We need to give a different definition. Your understanding is okay, but that is domestic part. When we are coming for corporate, we need to answer it in such way that KYC is a component part of AML and refers specifically to the means by which firms establish and verify the customer identities and monitor their financial behavior. So, as I told you, AML is an umbrella term, it is a metaverse. KYC is a part of it and refers specifically to establish and verify their customer identities. Okay, so let's focus on these two terms, that establish and verify. So let me explain to you in a domestic way. Like we, whenever try to identify an individual, we require very basic document, that is PAN card and Aadhaar card. When we try to establish a current account, we ask for the GST copy, the utility copy, or the firm address proof. Same way in US, UK, or Dubai, there are certain type of documents which are required for certain type of individual or firm we are interacting. So therefore this term establish, first we need to establish the documents of the firm or individual as per the regulator, and second we need to verify it. Like in India, PAN card we can verify it from income tax website. If we are going for Aadhaar, we can do a biometric verification upon that. Similarly, if we are working with an international organization, they have their own set of guidelines to verify it. So if we are doing the KYC, we need to do two things: establish and verify customer identity. And third, as KYC go on, we also need to monitor their financial behavior. Now, adding on to that definition, typically KYC process involves the collection and verification of range of identity information from customer, including name, address, date of birth, and company incorporation documents. As I told you earlier, that verify, identify and verify. Similarly, this identifying information is very critical to us. Like coming on the domestic term, let me explain you. Like in our PAN card, there is no mention of address. Therefore, we ask the documents where they have an address. So address is a identifying information. Therefore, we ask for the Aadhaar. Similarly, in international compliance, if we are asking, we need to collect those documents which are mentioned in the circulars which contain that relevant information. On this point, if we are saying KYC respective of country, these four things are very common in KYC when we are trying to collect. That is name, address, date of birth, and if it is a company related document, company incorporation document. So these four things are very basic in KYC irrespective of the country. Now add on to that, KYC or may also include ongoing transaction monitoring and a range of customer screening measures, including political exposed person, sanction screening, and adverse media screening. KYC, the second part of KYC, after account opening, we do a transaction monitoring in KYC also, and after that, we assign them a risk score, and we have a customer screening measures. Let me explain you this too. Like in India, when we open an account, we scan it and send it to our backend. Backend have bots, they have guys and their people, they have teams to monitor it against any banned, banned organization or banned people list. They scan it and after that we get a clean sheet that yes, we are okay to open the account. Similarly, in international banking, they have databases where they have list of people, they have list of addresses, list of business which are not allowed within a certain country. So upon that they cross check to it, and that they call as scanning or screening. Now coming on this political exposed person, PP is a very big domain, as I told you earlier. As I told you, financial crime is a big part. Similarly, PP also a big part. PP means politically exposed person. So I will explain to you this part also in my next videos. Just get to know this when we are answering this KYC question. Then also we need to give a complete definition rather than going on this PAN card, Aadhaar card, high, low, medium priority. We need to give a neutral definition so that the person who is taking up an interview will get to know that we know a complete part. So saying to coming to this AML KYC question, which has been asked to me also earlier also, I used to give the same answer as you are giving, that AML is anti-money laundering, KYC is know your customer. For KYC we used to take PAN card, Aadhaar card, we used to give a low, medium, high rating, and blah blah blah. That is not the definition they are searching for. We need to give a complete definition even though their answer is straight, but we need to include all the details which we know. So this is the whole video which I am giving to you. If you like this video to be informative, to be good, and do you have any relevant question, kindly mention in the comment box. If you like the whole video, like it, subscribe to my channel too. If you subscribe to the channel, it gives me motivation to come with more additional details. Thank you and have a nice day. Have a happy reading.